if you actually want to become a professional day trader, to do this for a living, there are certain things that you must do. So in this video, I'm going to show you what that thing is, and you're definitely not going to like it. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable. When I actually started demo trading and trading real money, I made so many mistakes along the way, and I would enter trades because that's the feeling that I got. There was really no structure to what I was doing. I was just kind of entering, closing, taking profit, letting my stop losses go way beyond what I thought they were going to, like no stop losses essentially 90% of the time. I would have these small accounts with like $200 or $500 in it, and then I would enter a trade and I would like go to sleep and wake up the next day, the account's gone because I didn't set a stop loss. Like, it was just pure and utter chaos. The reason why I did this is because I was watching other YouTube videos and tutorials and strategies and everything, and I would see these people taking small Forex accounts and then like in a day making like $1,200. And so I wanted to emulate that. And so there was no structure to their lot sizes, their position sizes, nothing. It was just enter on a whim and then hold until you got $1,000. And that's not the way to do it. So let's jump into the computer, and I'm going to show you how in May, trading one pair, I was able to generate 6% profit on my account. Okay, so you guys have watched my videos. You know my trading style. I have an overlay of the 21 period moving average, the 50 period, and the 200 period moving average. These are smooth moving averages. I like to drop my support and resistance lines on a higher time frame and then trade on a lower time frame like the 5-minute or the 15-minute. I've been highly addicted to the 15-minute lately because the candles that form on the 15-minute chart are stronger indicators than they are on the 5 or the 1-minute. So we had the project launch on May 2nd, so I didn't really trade the first few days because it was crazy. But then starting on May 5th, I was like, cool, I'm going to try to do one trade a day, which obviously didn't work out because I had what, 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. I'm going to go through all these trades with you and why I entered and why I didn't enter on some days. But I'm going to save the secret sauce for the end of this video because it's like, it's not the most highly searchable or captivating title to a video. Actually, let's get into the secret sauce. The secret sauce of what I'm doing here is proper risk management and journaling your trades. I know I keep telling you guys this, and I know 90% of you don't do it, but that is why more than 90% of you are failing day in and day out at your day trading. So if you want me to show you every single one of these trades and how to journal them and how to be a successful trader and how to make good profits every single month consistently, leave a like on this video. Shameless plug. Okay, so this is my trading journal for the month of May. I do not trade funded accounts because I cannot adhere to their rules. I've tried numerous times, but I either don't make enough profit in a given month or I do not trade enough within that month. Usually they require 10 trading days. Obviously you can see here, I only had 9 and my profit did not exceed 10%. It only hit 6%. I'm very laissez-faire with my day trading. If I don't see an entry, I don't trade that day. I go ride my bikes. So May 5th, I always trade London session because that's the time that I'm in the office and I'm working. We had a rejection off of a support and resistance line. It is 8 a.m. I got a 3-line strike, 3 bars up, 1 big engulfing down. I was like, cool, it's probably going to go towards the 200. The next support and resistance line is right here. What's my risk to reward? 20 pip stop loss, 40 pip take profit, take the trade. It was successful. Just like any scientist or anybody proving a certain thing, in order to get statistics, you must track everything. So on this trading journal, which is absolutely phenomenal and way better than the pile of crap that I was doing earlier, because I'm horrible at making my own Excel spreadsheets. But you get to select the pair through a drop-down menu right here. You have every single currency pair, as well as indices, gold, oil, and some cryptocurrencies. So you select your pair, you select your session, you select the date, and then you select whether you went long or short, a buy position or a sell position. You enter your stop loss in here. Once the trade plays out, like set the trade and then let it play out. Once it plays out, you select here whether it was a win, loss, or break even. I like to stick to a 1 to 2 risk to reward ratio. I know some people like 1 to 1.5 or 1 to 4. Whatever you do consistently, just put that in right here in the risk to reward area. And then never, ever, 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 ever risk more than 1%. 1% on my $50,000 account is $500. So if I lose a trade, I lose $500. If I win a trade, I make $1,000, give or take, with spreads and commissions. Once you enter in your stop loss here, your take profit will automatically be calculated because you're doing a 1 to 2 risk to reward ratio. The reason I said I had approximately a 6% gain is because these numbers are not exact. For example, this trade right here, the total win was $1,017.48, but with commissions on the trade, which was a 2.4 lot size, and my broker charges $7 per lot, it was $17.08 commission on that trade, which netted me $1,000.40. So it's a little bit different, but this will give me a general overview. Then this automatically populates whether you entered win or lose. Each time you win, you get 2. Each time you lose, you minus 1. And then right here, you drop a link from TradingView. You see this little camera icon right here. Every time you are looking at your screen, you can click that camera button and copy link to the chart image. That gives you a link to exactly what you're seeing here. So when I click on that link, I see exactly what that trade looked like, and it gives me a visual representation of my wins and my losses. I did not trade on the 6th because I do not like trading NFP. I did not trade on the 9th because we were already very far away from the 200, and I felt uncertain about it. I did not trade on the 11th because I wanted this candle right here, but I was not in the office at 5:45 a.m. I was waiting for another rejection off of this 21, assuming that it would go up towards this support and resistance level and towards the 21. Waited till like 9 or 10, what was that, 9? But it did not reject off of that, and so I did not want to force a trade, and I just got to work on something else. Next day, May 11th, looking left, I can see a double bottom, probably going up to this next support and resistance level, and exactly at 8 a.m., we got a nice engulfing candle rejection, put my stop loss on that trend line, which was also a swoop up of these two moving averages, the 21 and the 50, took my 1 to 2. Did not trade the next day because of how far we were away from the 200 period moving average, and we're literally in the middle of a support and resistance area. And I was like, nope, not doing it. Next day, same formation as before, swooping up in the moving averages, moving up to the 200 and the support and resistance level. A 1 to 2 didn't even get me to that level, so I took the trade and I lost it. Minus 1%. Good job, Artie. I did not trade this day because moving averages were crossing over. I don't like the spaghetti bowl, so no thanks. Next day, nice, strong, consistent trend. Looking to target this next support and resistance area. Took a quick scalp, and thankfully it played out. The reason I took this trade, a lot of the times I like it to reject off of the 21, but if the trend is that strong, I know that this is like the 7 or the 10 period moving average. And so I knew it had some momentum. This was more risky than I prefer, but I took it. Next day, 8 a.m., I saw this huge fat engulfing candle reject off of this support line. And I was like, okay, next engulfing candle that I get off of that area, I'm taking that trade. Took this one, 12 pip stop loss, 23 pip take profit. Did not trade this day because this is way too much noise for me. The next day, May 20th, we got a rejection off of this support and resistance level as well as the 21. Didn't see that one, but I did see the next one. Took the trade and got the W. Next day, uptrend continued. Figured it would go towards this support and resistance level. Lost the trade, minus 1%. Next day, swooping down, moving towards the 200 period moving average. Took the short position, assuming it would at least hit here, and lost again. Another loss. I mean, we were seriously obviously just in a period of consolidation right there. It was irritating as hell. When I get irritated at trades not playing out or price consolidating, I pretty much stop trading. And so that's when I stopped trading for the month. I was happy with my results and I had other shit to do. But essentially, it was important for me to know that every single trade had a reason for entry. And I had screenshots of every single one of these trades on the trading journal, what date I took it, how many pips my stop loss was, whether I won or lost, and what my results are. If you don't have this consistency in your day trading, you are not going to be successful. The nice thing about having these screenshots is that you can look at your losing trades and see post-trade what you missed in your analysis. So for example, this one, let's take a look at it. I went in on a long position, assuming it was going to go towards this next support and resistance area. But the thing that I didn't realize was that there was no momentum going on here. We're getting this wishy-washy, like flat line of the moving averages. So there's no momentum, meaning that there's no volume. And right here, I completely missed this double top. Double top, probably going to go back down. But instead, I went with the trend and I failed. Being able to see this and analyze your losses after the fact is going to help you over time prevent making those same stupid mistakes. And as you can see, I still make stupid mistakes. But I know that for the month of May, my win rate was 55.56%. I was able to gain 6% on my account, which is $3,000. $3,000 in a month just from trading 9 times. I mean, this isn't that much work, guys. I was maybe on the charts like an hour and a half a day. If I lived in America or somewhere where the currency was stronger, you know, I'd probably hustle a little bit harder to make more money. But 3,000 US dollars converted into Polish currency is like a crazy good livable wage. Plus, I have multiple streams of income, so trading is more of like a just make money for vacations type of thing for me. So for all of you guys that are looking for that 80, 90, 100% win rate strategy, you're wasting your time. You can make profit and be a profitable, successful, professional day trader with a 55% win rate and trading casually, waiting for those good entries and having specific rules, or just knowing all of the shit that I teach on this YouTube channel. Essentially, I highly suggest that you use a trading journal. If you do not use a trading journal and you're not tracking your trades, you will consistently lose. You will consistently get out of your trades early. You will consistently keep moving your stop loss, getting you farther and farther in the hole. If you are not tracking your trades, it's not the strategy. It's not the market. It's you. I got 2 options for you. Take a screenshot of this and try to emulate it as best as you can on Excel. This is free. Have it. Take a screenshot, write down every single one of your trades. If you can figure out the formulas by yourself, go for it. If you want a copy of this exact thing, it is a part of the membership for the trading floor, which is a project that we launched on May 2nd. On the website, once you sign up in the Get Smarter section, there are a bunch of resources right here. And the trading journal is right here. You just click to download that, save it, and title it whatever you want. Mine is Artie's Journal. I really want to make you guys profitable, and the only way for me to get you there is for you to do this. Be a professional, write down everything, get statistics, be consistent, be a machine, do not change your stop loss and take profit, enter your trade, let it play out, journal it, then learn from your mistakes and stop doing them. And if you guys want to learn more about the strategy that I showed in this video, you can watch this video right here. And if you guys enjoyed this video and got some value out of it, make sure you're dropping a like on these videos and subscribe if you have not already. Thanks so much for watching, and we will see you in the next one.